Hey everyone, so for today's video, we're just going to go over a bull case for Bitcoin and just lay out some arguments that I believe that why Bitcoin hasn't reached its peak yet and we still have more to go in this market cycle. So before I continue, a lot of what I think, a lot of what shaped my macro view on Bitcoin has been shaped by Benjamin Cowen and Crypto University. So in today's video, I'm going to be utilizing some key points of their arguments and just synthesize the two into mine. And full credit goes to those two guys because they do a lot of great work and they're really good YouTube channels. So what you're looking at here is how the Bitcoin crypto cycles have been shaped by the halving. So this blue line over here is after our first halving of November 28th, 2012. Well, it's not the first halving, but it's this first halving that we could see on this chart. And this is the second halving on the yellow line starting from July 9th of 2016. So basically what I tried to do here was try to align it with our most recent halving in May 11th of 2020. And I just wanted to see how each of these halvings look like when compared to each other. So this is something that Benjamin Cowen does at his channel. And so let's bring it down. So immediately we could see that there is a structure to every single market cycle, right? In between the halvings, there is always some sort of run up, and there will be some sort of pullback, right? That's kind of what we see here, and then we always get some kind of peak. This is the peak of this market cycle. This was the peak of that market cycle. And so what you can see here, what Benjamin Cowen likes to talk about is the theory of diminishing returns. And so you can see that after every cycle, we have two data. Well, we have three, but from 2012, we could see that Bitcoin's returns are smaller. And not only that, but it takes longer to reach that point. And so the idea is that we are going to, in this market cycle, going to end up somewhere around here, which is diminishing returns, so a lower rate of return of investment, and also it takes longer. And so we can see there's another key structure here where after it peaks, it takes around about a year for it to bottom, to find its bottom, right? So from here, it was May, and then it's June, so it's about a year. This was October, and this was the next year, October. So it'll take about a year for us to fall, and then we'll reach some sort of bottom here. So we can expect that bottom, I'm just eyeballing it at this point, somewhere around like, next 2023, July or August. And we can always see that within the same cycle, within the same halving, so let's say you're here, right, at this point of time, and then you know that there's going to be another halving soon. So what seems to happen is that there is always a pre-rally to the next halving. So we can see the same thing happen here. After we hit the bottom, right, people knew that there was a halving coming up pretty soon, and so there was some sort of pre-rally. So we can also expect maybe the same thing to happen, maybe like somewhere in 2024. We reach our bottom here, and then we get some kind of pre-rally before the halving. So you can see that in the past two market cycles that we could see here, we have done in general, a pretty similar structure. So where does that leave us with right now? So this is where the recent halving started, and we could see that we've done something similar to what we did in 2012, where we did some sort of like mid-cycle peak and a mid-cycle pullback. So this also clearly demonstrates diminishing returns and longer cycles. The previous peak was over here, now it's down here, and then the previous peak would happen this was May and this was so like a couple of months, like 4 or 5 months after the halving, we would peak, but this time it took a bit longer. So diminishing returns, longer cycles. So, and also if we really have diminishing returns and we expect this cycle to peak around here, we can expect us to, from now on, be underneath this yellow line, which was the previous cycle because of diminishing returns. And so that is my bullish outlook. So if this was somehow the peak, and if we just do, like, we just drop all the way back down here, like do one of these moves where it's a market cycle peak and go all the way down, market cycle peak and go all the way down. If we do the same move, then it would throw off this entire theory, which would be fine, right? Then we could just, and then I'm assuming, like, Benjamin Cowen would just create another theory, and like this would just be an anomaly, or this is just the way things work now. But with the information and data that we have now, and if we make guesses with that trend, we can assume that we will follow the last two cycles and finish around here after this expected. I mean, this was pretty much expected pullback, and so yeah, that's the market cycle, diminishing returns, and longer cycles theory from Benjamin Cowen. And this is another very interesting thing from Crypto University. So his idea is that we have, during every market cycle, we have a mid-cycle pullback. So these are the lines that we drew, which demonstrates our this idea of a mid-cycle pullback. And to further this, we're going to use the RSI. So basically, every single market cycle has two peaks in the RSI. This is the 2012 market cycle, this was the 2016 market cycle, and this is today. So notice how the past two market cycles we had two peaks on the RSI, this representing the peak of the mid-cycle pullback, and the real end of the market cycle peak. So same thing here, pullback, mid-cycle pullback, and now. So his argument is that we are doing the same thing now. This peak was expected. See how this peak, our last peak was around 92, which is kind of similar to around where the other peaks were, like here and here. So we were within the area of where we expected a pullback. That is also another reason why I sold all of my crypto at 58,000. And so we expected this, but we didn't expect it to go down this much. So this is an anomaly. But so his idea is that we're gonna go back. This was just a mid-cycle pullback, and we're gonna go back to our peak, our real market cycle peak. And so that all happens within the borders of these resistance and support lines, right? This box that he calls it. So you can clearly see the pullback happen within this box. Here, the pullback happens within this box, right? If you look at the bottom at the RSI, it peaks here, it bottoms here, right? That's our box. And then the interesting thing here is that we could be doing something similar. So this is our little box that we have over here. And if you look at the monthly candle, if you know how to read candles and technical analysis, you could see this and like, wow, this is like kind of bullish, right? This does look like a bottoming pattern on the monthly, but of course, if you look at it from like other time frames or other perspectives, it might not look so bullish. But this is Crypto University's idea. I do think that you can synthesize this idea with the market cycle, diminishing returns market cycle that we have. So with Benjamin Cowen's and Crypto University's ideas together, you can assume that that we are in this some sort of like consolidation zone, which indicates a mid-cycle pullback, and it does not indicate the end of the market cycle. It's just a pullback that we usually get, that we have gotten the past two market cycles. And we do have a lot more room to go according to these two indicators. So yeah, if you see this line come back, this RSI come back all the way back up here, right, somewhere around this time, then you'll know that it's time to sell, because we've done it again and again in the past. And looking at the market cycles, right, we could just kind of just eyeball according to this data where it'll go, right? This is just a pullback, and maybe we reached around 100,000 ish, 120,000-ish at like March or April of next year. So this is just a bullish case of why Bitcoin has not peaked and why we have still a lot more room to go in this bull run. In the next video, I'm going to talk about the bearish case, why we have reached our peak. So I hope you guys enjoyed this video, and I'll see you guys next time.